Well, Dina, it's very nice to see you again. I trust you're keeping well.
Yes, I'm keeping well, even after the second vaccination. It's safe, it's good. Good to see you, Rodney.
Well, I'm glad that you've managed to get vaccinated. Congratulations. So you lead the tech sector for KPMG in Israel, and you and I were just talking about just the explosion of activity in that sector. Tell me a little bit more from your perspective, what's going on?
So the past year has been a real roller coaster. So I think exactly a year ago, we were all a little bit shocked, and at some point it seems like fundraising and IPOs are, off the table. But I think towards mid 2020, we started seeing a change. I think partly because the large VCs and institutional bodies around the world and other, let's say, capital markets component pushed a lot of dry powder, a lot of cash towards the tech industry. I think that at that point in June, July, it was obvious that the tech sector is in some way kind of a solution or remedy to the COVID-19 crisis we are facing. Digital transformation, etc., and money began going towards more mature fundraising grounds of tech companies, especially in hot areas like digital health and cyber and payments and gaming and all these things that are booming as a consequence of the crisis, the pandemic that we are currently facing. And then we saw some, large IPOs that began to come out, successful IPOs. And then I think it just became completely hectic, and the IPO fundraising rounds, transactions, exits, it's been crazy and in a completely unexpected way. If a year ago, when this whole crisis began unfolding, you would tell me that we would be in this position in a year time from now, I would find it very hard to believe. And but that's the situation, and it's really an interesting period to live in and to be a tax professional in it.
Well, it is an interesting period, and seeing as you mentioned that you're a tax professional, I'm going to start turning towards tax. You mentioned that you're seeing a lot more in the field of IPOs and presumably SPAC IPOs. What are you seeing in that space, Dina?
I mean, we are seeing regarding Israeli tech companies a very common and rising interest in SPAC IPOs. SPAC IPOs, besides being much faster and they don't require prospectus, they can also they enable the sponsors of the SPAC who raise the money in the market to base his investment decision on projections, which in a regular IPO it's not possible. And right now there is a lot of money and a lot of SPACs that have raised money, and they are looking for interesting investment. And obviously the Israeli tech market is a very place to look for money. We've seen tech companies that are not in any way in a desperate need of cash, but the availability and the ability to be traded are attractive to them. So they are examining these possibilities. Plus, of course, the valuations are very high. So we've seen really a growing interest in SPAC IPOs, in this instrument. And from a tax perspective, I think what's interesting is that unlike a regular IPO, which, I mean, there are tax elements that should be taken into consideration while doing, of course, an IPO, but a SPAC IPO, by definition, at day one, there is an exchange of shares between the owners of the SPACs and the target, or the other way around. And so at day one, you have a tax event, and we tax advisor kick in and need to somehow resolve this. In the SPAC deals, the large SPAC deals that already went out and the ones that are currently in the kitchen cooking in the oven, because of different elements in the Israeli tax system, we have seen a structure in which the Israeli target company is actually on top, and the SPAC is basically under. And we have some, U.S. tax issues regarding the owners of the shareholders of the SPAC, which we are resolving in accordance, and of course with the U.S. firm together. But that's the structure. So we had to struggle with this to find the right way, because it's a SPAC deal is usually negotiated in a very short time frame, and it's very difficult to obtain a ruling and to solve all the tax issues. So definitely challenging, and the tax is a very important element in SPAC deals, which is also good news.
Well, tax is everywhere, and thinking about tax, and then perhaps coming back to the tech sector more broadly, are you seeing changes in the current approaches to tax in that sector?
I think that it's fair to say, yes. I mean, we start seeing a certain shift in the general approach of, I think, tax authorities worldwide, but certainly in Israel as well. I think at this point, when we are 1 year in this crisis, I think it's fair to say that the tech sector in general is the big winner of this COVID-19. Sometimes when I'm mentioning it to tech entrepreneurs or founders that tech is the big winner, they are like feeling uncomfortable that they didn't initiate. It's not their fault. It's okay to say that it's just the way it is. And what we're seeing, tax authorities worldwide and in Israel are also seeing, and naturally they are approaching the big pockets, and the big pockets are now within the tech companies. And you see a growing appetite, sometimes even aggressiveness towards tech companies. You see a change in approaches. For example, in Israel recently, the tax authorities are trying to challenge the cost-plus mechanism as a viable methodology to compensate cost centers, R&D centers of multinationals and large multinationals. So I mean, we haven't experienced, at least not in Israel, a change in legislation due to the COVID-19, which also at some point may occur. But you certainly see a shift in the way the law is interpreted and the way it's implemented. By definition, every case is unique. Every case has its own characteristics. And you see a growing aggression towards tech companies, and I expect we'll see it. In addition, you have let's say the other OECD developments that started before COVID-19 and are also approaching, and I think at a higher level, governments are realizing that something needs to be done with the DST, with the digital service tax. So that's going in the background as well, and companies are preparing themselves for the day after.
Well, and talking about the day after, I really don't want to put you on the spot and do crystal ball gazing, but if you had to look down the road, what do you see happening in the near future in this space?
Again, I think that also the change in administration in the US, I do at least expect there will be an understanding regarding a comprehensive DST program to be implemented, and hopefully the OECD will be able to repeat its success of OECD of the BEPS 1.0 in the BEPS 2.0 now with the DST. Hopefully they will be able to reach a global consensus and apply this. Otherwise we are facing a mess, I think, because more and more countries are becoming more and more aggressive, and there are a lot of open questions towards this. And in addition, I think that we will see changes in tax legislation that enables the tax officers to collect more from tech companies, because right now all the domestic, the supermarkets, the restaurants, the tourism, everything is is in great difficulties, and someone will have to pay the bill. I mean, I don't see any other way.
Well, and maybe that's a good note to leave the discussion on. A very successful industry, but where success goes, tax tends to follow. So, Dina, thank you for your time today. It was a pleasure catching up with you again, and I'm looking forward to the next time I get to see you, perhaps at our next annual partners meeting in Ireland. Nice to see you.
Hopefully, hope to see you soon. In person, not in Zoom.
In person. Okay.